Hey everyone, and welcome back to Talk Tickers, where we break down all those earnings calls you probably don't have time to listen to. And today we're diving into one that really caught our attention: Plug Power's Q4 2024 report.
Yeah, this one had some pretty unexpected twists and turns. Plug Power is obviously a big name in the green hydrogen space, and they just dropped their numbers, 191 million in revenue for Q4, which brings their total for the year to 629 million.
Okay, so we're talking some serious cash here. But I'm guessing it's not all sunshine and rainbows, right?
You got it. Those numbers are actually a bit softer than analysts were predicting. A couple of things contributed to that, like a $22.7 million warrant charge and some project delays, particularly in their electrolyzer business.
So a few bumps in the road. Gotcha. And what about guidance for next quarter? Did Plug Power give any hints about what they're expecting?
They did. They're projecting revenue between 125 million and 140 million for Q1 of 2025. So it seems like they're thinking these delays will be ironed out soon and we'll see some growth in the coming month.
Okay, so revenue might be taking a little detour.
Yeah.
But what about their bottom line? What about profitability? That's what really matters in the long run, right?
For sure. And this is where things get really interesting. Plug Power announced a major restructuring plan. They're calling it Project Quantum Leap, and it's all about cutting costs and finally reaching profitability.
Project Quantum Leap, huh? Sounds pretty intense. What exactly does that involve?
It's a pretty significant shift. They're talking staff reductions, narrowing their product focus and consolidating facilities, basically becoming leaner and meaner. They're aiming to save a whopping $150 million to $200 million annually through these measures.
Wow, that's a big chunk of change.
Yeah.
What prompted this sudden push for profitability? Did the CEO say anything about that during the call?
He did. Andy Marsh, Plug Power's CEO, was very upfront about the challenges they're facing. He talked about how the hydrogen market isn't growing as fast as they initially anticipated. There are a few factors at play here: the pace of policy implementation, the overall global energy landscape, maybe some overly optimistic predictions in the past.
So a bit of a reality check for the hydrogen hype.
You could say that, but it's not all doom and gloom. Plug Power's doubling down on what they do best: material handling electrolyzers and producing hydrogen specifically for material handling. They see these as their core strength, and they're already seeing some positive results in these areas. For example, their margins for service and hydrogen significantly improved in 2024, expanding by about $120 million compared to the year before.
Okay, so some bright spots amidst the cost cutting. But it sounds like Plug Power is going through a major transition. What does this all mean for them and for the hydrogen market as a whole? What's the big picture here?
Well, it's interesting because Plug Power is acknowledging that the hydrogen market isn't going to explode overnight. They're being more realistic and focusing on areas where they have a clear advantage and a path to actually making money.
So less chasing every shiny object and more building a sustainable business.
Exactly. And this shift in strategy could actually be a good sign for the industry. It suggests that the hydrogen market is maturing and companies are starting to prioritize long-term sustainable growth over hype-driven expansion.
From moonshot dreams to grounded reality, huh? That seems to be the theme in a lot of industries these days. Now let's talk about Plug Power's financial situation. What's the state of their balance sheet?
Well, they ended 2024 with more cash than expected, over $200 million in unrestricted cash to be exact. They've also been smart about leveraging opportunities like ITC transfers, which brought in an additional $30 million.
So they're not exactly hurting for cash. Always a good sign.
Yeah.
But what about their debt? Are they carrying a heavy load?
Not really. Their balance sheet is relatively light on debt, which gives them more flexibility to navigate the current market conditions and make strategic decisions.
That's reassuring to hear. What did they share about their plans for 2025 and beyond? Did they give any specific guidance?
They didn't provide detailed financial guidance for the full year, which is understandable given the current uncertainty.
Yeah, it's tough to predict the future in this environment. But did they hint at any key trends or themes they're watching?
Definitely. Their message was clear. They're laser focused on driving down costs, expanding margins, and reducing cash burn. It's all about proving they can be a profitable and sustainable player in the hydrogen game. They're particularly bullish on their electrolyzer business. They expect significant growth in sales and bookings, especially with some large-scale projects in the pipeline, like a 100-megawatt deployment with GALP in Portugal.
Wow, 100 megawatts. That's a serious commitment to green hydrogen production. Anything else stand out to you about their outlook and future plans?
One thing that struck me was their emphasis on profitability. They made it clear that any project or initiative that doesn't directly contribute to profitability or cash generation is off the table for now. They're being very disciplined and strategic with their resources.
It's like they're saying, show me the money.
Exactly. They're not just chasing potential anymore. They're focused on tangible results.
Okay, so we've covered a lot of ground here. What are your key takeaways from this deep dive into Plug Power's Q4 report? What should investors be paying attention to?
The biggest takeaway, in my opinion, is that Plug Power is at a turning point. They're facing the challenges in the hydrogen market head-on and taking proactive steps to position themselves for sustainable growth and profitability.
It's a fascinating transition to watch. From the initial hype to the current reality check, and now this laser focus on profitability. Yeah. I like they're entering a new chapter in their story. Now, before we wrap up this section, let's have some fun and put on our speculative hats. It's time for our This Is Not Financial Advice segment, where we brainstorm some out there but plausible trade ideas inspired by what we've learned.
All right, let's get those creative juices flowing. Imagine this Plug Power is determined to achieve profitability, right? They're streamlining operations, slashing costs, and focusing on their most profitable segments. This kind of strategic shift could make them a prime target for specific options. Play selling covered puts.
Covered puts. Okay, I'm intrigued. Break it down for us.
Think of it this way. You're bullish on Plug Power's long-term prospects, but you're also aware of the near-term volatility. Selling covered puts lets you capitalize on that volatility while potentially getting into the stock at a better price.
Interesting. How would this work in practice? Give us a concrete example.
Let's say, based on recent technical analysis, selling a covered put with a strike price of $7.50 and an expiration date a few months out looks appealing.
I'm following so far. What makes this particular strike price and expiration attractive?
Well, the 7.50 strike price acts as a cushion below the current trading price, providing some downside protection. And the shorter-term expiration allows you to collect premium relatively quickly.
So you're getting paid a premium for selling the put option, which is essentially a bet that the stock price won't drop below 750 before the option expires. Yeah. And if it does fall below that price, you're obligated to buy the stock at the strike price, effectively getting in at a discount.
Exactly. And if the stock stays above the strike price, you keep the premium, you collected a nice little profit for your effort.
Okay, that makes sense. It's a way to potentially benefit from both upward and downward price movements, as long as you're comfortable owning the stock if it dips below the strike price.
Right. And given Plug Power's shift towards profitability and their strong position in the growing hydrogen market, owning the stock at a lower price might not be such a bad outcome.
All right, so a covered put strategy on Plug Power could be an intriguing way to play their transition towards profitability. But before anyone rushes out to make this trade, we have to emphasize a very important point. This is not financial advice.
Absolutely. Trading options carries risks, and it's essential to understand those risks fully and consult with a qualified financial advisor before making any investment decisions.
Couldn't agree more. This segment is purely for entertainment and educational purposes. We're just trying to spark your curiosity and get you thinking about different trading possibilities, not telling you what to do with your money.
Exactly.
Yeah.
Always do your own research, consider your risk tolerance, and never invest more than you can afford to lose.
Wise words. All right, let's move on to the next segment of our deep dive into Plug Power's Q4 earnings call. We're back with more on Plug Power's Q4 earnings. And now let's shift gears a bit and dive into the Q&A portion of the call. I always find this part super insightful. You get to hear what questions analysts are throwing at the company's leadership team. What were some of the hot topics this time around?
Well, one thing that analysts were really digging into was Plug Power's strategy for navigating the current policy landscape, both here in the U.S. and over in Europe. You know, government support can make or break emerging industries, and hydrogen is no exception.
For sure. Policy uncertainty can be a major headache for investors. So what did Plug Power have to say about this?
Well, Andy Marsh, the CEO, was cautiously optimistic. He admitted that the implementation of the Inflation Reduction Act, especially regarding hydrogen tax credits, hasn't been as smooth as they'd hoped.
Yeah, that's understandable. A lot of folks in the hydrogen sector were banking on more aggressive support from the IRA.
Right. But Marsh expressed some hope that the current administration might be more receptive to the industry's needs given their business-oriented approach.
Interesting. So a glimmer of hope for some more favorable policy winds down the road?
Maybe. So Marsh also made a point of highlighting the bipartisan support for hydrogen. He mentioned that the last major fuel cell bill was passed under a Republican-led Congress and president. He even brought up a recent bill introduced by a Republican representative in support of fuel cells. It seems hydrogen isn't necessarily a partisan issue.
That's a good point. When it comes to clean energy and economic competitiveness, both sides of the aisle can often find some common ground.
Hmm.
Okay, so a mixed bag on the policy front with some potential headwinds in the U.S., but continued tailwinds in Europe. Gotcha. What else were analysts grilling Plug Power about?
They were very curious about the company's plans for that massive green hydrogen plant they're building down in Texas.
Yeah.
Remember, this is a 45-ton per day facility that could significantly increase their production capacity.
Oh, yeah, that's a huge project for them.
Yeah.
What's the latest on that? Are they breaking ground soon?
It's moving forward, but the timeline has been slightly adjusted. The good news is the Department of Energy loan for the project has been finalized and approved. They're just waiting to finalize a few additional agreements before construction officially begins.
So dotting the I's and crossing the... Gotcha. When do they expect to actually start building?
Their current estimate is sometime in Q4 of this year, with project completion expected 18 to 24 months after that.
Okay, so not exactly imminent, but at least the wheels are in motion.
Mm-hmm.
This project is a massive undertaking, though. What about the funding? Do they have all the money lined up?
They've already invested around $250 million, an estimate needing another $600 million to complete the project. They've secured equipment financing for their equity portion and are currently talking with external investors to figure out the remaining funding structure.
So a mix of internal and external funding. Any insights into who they're talking to for those external investments?
They mentioned they're primarily in discussions with infrastructure funds, which makes sense given the scale and long-term nature of the project.
Yeah, infrastructure funds are often drawn to these kinds of large-scale energy projects. It sounds like the Texas plant is still on track, just with a slightly longer timeline than initially anticipated. What other questions were the analysts throwing Plug Power's way?
Well, they were particularly interested in the company's progress towards achieving positive gross margins. Remember, that's a key piece of their profitability goals.
Right. They've been talking a lot about reaching profitability. Did they give any indication of when they expect to hit that positive gross margin milestone?
They reaffirmed their expectation of turning gross margin positive by the end of 2025. Although they acknowledge that Q1 2025 might still be impacted by seasonality and the current macroeconomic environment.
So they're sticking to their guns on that target, even with the current economic headwinds.
Exactly. They emphasize the significant cost reductions they're making through Project Quantum Leap, which they believe will play a major role in achieving that goal.
It seems like they've got a solid plan and are taking concrete steps to execute it. It'll be interesting to see how their progress unfolds over the coming quarters. Did the analysts dig into any specific projects or initiatives that Plug Power is working on?
They did. There was a lot of interest in the performance of Plug Power's existing green hydrogen plant in Georgia. This facility has been operational for about a year now, so it provides valuable insights into their future projects.
Yeah, that's a great real-world test case.
Yeah.
So what did they share about the Georgia plant's performance? Is it meeting expectations?
They reported that the plant is running smoothly and efficiently. Production costs are currently around $5 per kilogram before factoring in the production tax credits.
$5 per kilogram. That sounds pretty competitive, especially in the green hydrogen space.
It is, especially considering that the production tax credits bring that cost down to around $2.50 per kilogram. They also mentioned they're currently running the plant at around 11 to 12 tons per day, with the capacity to increase output to 15 tons per day based on demand.
So they've got some room to grow as the hydrogen market expands. That's smart planning. Are they utilizing the plant at full capacity most of the time?
Not quite. They said they can run it at full production if needed, but current demand dictates a slightly lower output. They seem to be taking a measured approach, scaling production in line with actual demand.
That's a prudent strategy. No point in producing more hydrogen than the market can currently absorb.
Exactly. With the Texas plant coming online in a couple of years, they'll have even more capacity to meet the anticipated surge in demand for green hydrogen.
Okay, so they're scaling up production, driving down costs, and becoming more strategic in their approach. It sounds like Plug Power is taking the necessary steps to become a major player in the hydrogen market. But now let's put on our speculative hats for a moment and explore some more outside-the-box trade ideas inspired by Plug Power's recent moves. It's time for our This Is Not Financial Advice segment.
All right, let's dive into the world of hypothetical trades. Remember, folks, this is purely for entertainment purposes.
We're just brainstorming here, not giving financial advice. Don't blame us if your trades go south.
Exactly. All right, so Plug Power is going all in on green hydrogen production, right? They've got their Georgia plant humming along, they're building a massive facility in Texas, and their electrolyzer business is booming.
Okay, I'm following. They're riding the green hydrogen wave. What's the trade idea here?
Well, instead of just focusing on Plug Power itself, what if we look at the companies that stand to benefit from their success?
I see where you're going with this ecosystem plays, right? The companies that provide the components, materials, or services essential for Plug Power's hydrogen production.
Precisely. It's like the picks and shovels during a gold rush.
Love it. Give us some specific examples. What kind of companies are we talking about?
One area to consider is the suppliers of key components for electrolyzers, companies that manufacture specialized membranes, electrodes, or other critical parts.
Interesting. So as Plug Power scales up electrolyzer production, these suppliers would see a surge in demand for their products.
Exactly. And because these components are often highly specialized, there may be fewer suppliers, giving them more pricing power and potentially leading to some pretty sweet profits.
Makes sense.
Yeah.
What other ecosystem plays could investors explore?
Another interesting angle is the companies involved in the transportation and storage of hydrogen. Hydrogen is a tricky gas to handle. It requires special tanks, pipelines, and logistics networks.
Right. It's not as simple as just using existing natural gas infrastructure.
Exactly. So companies that specialize in hydrogen transport and storage could be big winners as production ramps up.
Okay, we've got electrolyzer component suppliers and hydrogen logistics providers. Any other out there but plausible plays to consider?
Here's one that's a bit more off the beaten path. What about the companies developing technologies to use hydrogen more efficiently? Think fuel cell advancements, hydrogen-based energy storage solutions, or even novel applications in industries like steel production or ammonia synthesis.
So not just the infrastructure for producing and moving hydrogen, but also the technologies that enable its wider adoption.
Exactly. As the hydrogen economy gains traction, these companies could be well positioned to capitalize on the growing demand for innovative solutions.
So we've got a whole ecosystem of potential investment opportunities surrounding Plug Power's green hydrogen ambitions, electrolyzer components, hydrogen logistics, and next-generation hydrogen utilization technologies. It's a lot to digest.
It is. It's exciting to think about all the possibilities. But remember, folks, this is all highly speculative. Always do your own thorough research, carefully assess the risks, and consult with a qualified financial advisor before making any investment decisions.
Couldn't agree more. This isn't about blindly following the crowd. It's about being an informed investor and making your own decisions.
Well said. And with that, I think we've squeezed just about every drop of insight out of Plug Power's Q4 earnings call.
It's been a whirlwind of information, from their strategic shift and green hydrogen plans to those speculative trade ideas.
It has. And it's just a glimpse of what's to come as the hydrogen economy continues to evolve.
And we'll be here to break it all down for you every step of the way. Thanks for joining us on Talk Tickers, your go-to podcast for earnings call deep dives. Until next time, happy investing. Okay, so we've talked about Plug Power's financials, their overall strategy, and even some fun speculative trade ideas. But let's get back to the nitty-gritty of their earnings call. What else stood out to you from the Q&A with analysts?
Well, analysts were really curious about one specific area we've touched upon already, Plug Power's electrolyzer business. They wanted more details about the company's competitive advantages in that space.
Okay, that makes sense. Electrolyzers are a pretty crucial piece of the whole green hydrogen puzzle, right?
Exactly. They're the devices that spill water into hydrogen and oxygen using renewable energy. And Plug Power sees electrolyzers as a major growth driver for them.
So what makes Plug Power stand out from the competition in the electrolyzer market? What's their secret sauce?
They highlighted a few key advantages during the call. First, they've got a strong track record and experience in this space. They've been developing and deploying these systems for quite a while now, so they've built up a lot of valuable know-how.
Yeah, experience definitely counts for something in a rapidly evolving industry like this.
Yeah.
What else did they emphasize?
Their vertically integrated business model is another big differentiator. Plug Power not only manufactures electrolyzers, but they also produce green hydrogen and develop fuel cell systems for various applications.
So they're covering all the bases.
Yeah.
Gotcha. But a lot of companies are jumping on the green hydrogen bandwagon these days. How does Plug Power's technology actually stack up against the competition?
Well, they claim their electrolyzers are more efficient and have a lower cost of ownership compared to some of their competitors. They've also invested heavily in research and development to keep improving their technology and stay ahead of the curve.
Innovation is key in any emerging industry. Did they give any specific examples of how their tech is superior?
Yeah, they pointed to the efficiency of their proton exchange membrane, or PEM, electrolyzers. These things operate at high current densities and can quickly adapt to changes in power supply.
So they're designed to work seamlessly with renewable energy like wind and solar, which can be a bit intermittent. That's a big plus in the green hydrogen world. Any other technological advantages they talked about?
They also mentioned their modular design, which allows them to scale their systems up or down to meet a wide range of customer needs. So they can deploy smaller systems for niche applications or combine multiple modules to create those large-scale hydrogen production plants.
Gotcha. Flexibility and scalability, those are super valuable features in a market that's still developing. It sounds like Plug Power is well positioned to capitalize on the growth of the electrolyzer market. But zooming out a bit, where do they see the biggest opportunities for this tech in the coming years?
They're betting big on industrial applications. Right now, a lot of hydrogen is produced from fossil fuels, what's known as gray hydrogen. Plug Power believes they can replace that gray hydrogen with their green hydrogen in various industrial processes like steelmaking, ammonia production, and refining.
Interesting. So it's not just about fuel cells for cars and trucks. They're looking at a much broader range of uses for green hydrogen.
Exactly. They see a huge market opportunity in decarbonizing those heavy industries.
Yeah.
And for a lot of industrial customers, replacing gray hydrogen with green hydrogen is a more straightforward transition since they can often use their existing infrastructure and processes.
Makes sense. Less disruption, faster adoption.
Yeah.
That's a compelling argument. But we got to acknowledge the challenges too, right?
Yeah.
What are some of the hurdles Plug Power might face as they try to scale up this electrolyzer business?
Well, the cost of green hydrogen is still a major barrier to widespread adoption. I mean, even though Plug Power is working to bring down the cost of their electrolyzers, green hydrogen is still generally more expensive than that gray hydrogen produced from fossil fuels.
Right, so the economics still need to work out for green hydrogen to really take off. What else could hold them back?
Scaling up manufacturing to meet that anticipated demand is another challenge. They'll need to ramp up production significantly to fulfill those large orders and keep pace with the competition.
So it's not just about having the cool tech, it's about being able to produce it at scale.
Exactly. And then, of course, there's the need for supportive government policies and regulations. The growth of this whole green hydrogen market is going to depend a lot on things like government incentives, carbon pricing mechanisms, and investments in infrastructure.
Right, those are all crucial pieces of the puzzle. It sounds like Plug Power has their work cut out for them, but they seem to be tackling these challenges head on.
Well, I think we've covered just about everything there is to know about Plug Power's Q4 earnings call from their financials and strategic shifts to their green hydrogen ambitions, and even some out there trade ideas.
Yeah, it's been a fascinating look into the world of green hydrogen, and I'm really curious to see how Plug Power executes on its vision and what the future holds for this industry. Me too. And we'll be here to break it all down for you every step of the way. Thanks for joining us on Talk Tickers, your go-to deep dive into the world of earnings calls. Until next time, happy investing.